Today I'm going to address a question that I get all the time. Is this a dip or a drop? And how do I know? Isn't the bigger question, should I stop out of the trade or should I hold it? And an even bigger question should be, could I have seen the dip coming and should I have adjusted my risk ahead of time? Before I get started in today's video, please give this video a thumbs up, subscribe to my YouTube channel, and let other traders know that this is a good resource. I'm trying to reach as many people as I possibly can, and to be quite frank, the revenues that I get off of my YouTube channel, they don't even cover the cost of my thumbnails. So I'm doing this purely for educational reasons. So let's get started and take a look at what the components are to determining whether or not we should have prepared for a drop and how we can expect to find them, how deep they're going to be. What is the character of the market currently? Because the market is the biggest puzzle piece. That's the one that we really need to focus on the most. How did we get from point A to point B? Now that's super important for the stock, but it's also important for the market. So what type of market cycle are we in currently? Are we in a bullish market cycle? Are we in a bearish market cycle? Are we in a transitioning market? Well, if we're in a transitioning market, we're going to see long green and red candles. First and foremost, we should not be in any longer term swing positions because we don't have a clear direction for the market. Buyers and sellers are paired off and we see lots of volatility. If we're in a bullish cycle, are we in the early stages of the bullish cycle? Are we in the middle of it? Are we towards the end of it? That's going to also determine the character of the price action that we're seeing. So if we're in an early bullish cycle, for instance, we're going to see very shallow, brief dips because buyers are super aggressive. They're very motivated and they want to buy. And so the new highs that we see are going to be substantial. So when the market does have a dip, that previous relative high, we're going to blow through it because buyers are scooping up that dip and they're fueling the next leg higher. As the market starts to mature, like we have in this instance right here, the dips are going to be relatively brief and shallow, but we're also going to be seeing these little marginal new highs. So the trend is still strong. The dips are fairly brief, so we don't really need to worry about that. And our focus really shifts to the underlying stock. So if I do take a look at what a mature market cycle looks like that might be transitioning, you're going to start to see these big dips. And eventually, you're going to get a dip that is deeper and more prolonged than any dip that we've seen previously. And the market's going to bounce because buyers have been conditioned to buy dips, but they're not going to be able to get the market up to a new relative high. That's when you get your lower high. If you see this and you're in longer term swing positions, this is your clue to exit. Get out of whatever you have that's remaining. So let's take a look at the market and I'll try and drive this point home. So this is the market over the course of the last 6 months or so. And you can see how the dips have been brief and shallow. Every time we have this little dip, now we have a marginal new high. The market barely ekes out a new high, so we're kind of getting in the mature stages of a bullish cycle. And if you are a longer term swing trader and you are in the right stocks, then you're going to be expecting these little dips and you're going to weather these dips. And these could even be areas where you add to your position. So if you're in a longer term starter swing position and you get this dip and you can see that it's resolved and now you're starting to find support well above the major moving averages, okay, we tested this breakout and we flew off of it. This is where I can start adding to my longer term bullish swing positions. And at this stage, we still don't know that this is going to be unfolding. It's unknown to us, but we've seen that, yes, buyers were aggressive here. Another dip, buyers are aggressive, so we can add in this area to longer term bullish swing positions. Now, if you're a fairly short-term trader and if your market confidence isn't very high, then you can actually time these little peaks and you're watching for these particular patterns. One pattern before we see the dip. Again, you want to be proactive. You don't ever want to feel like you're blindsided. I didn't see that coming. How could I have possibly expected that? Now I'm trying to figure out if this is a dip or a drop and my position's gone to hell and your emotions are running high because money is on the line. Be proactive. How we get from point A to point B tells us everything. Tells us when to expect these drops. So if I'm short-term hit and run type of trading mode, then what I'll be watching for is these big extensions above the EMA 8. So you get your dip, the market runs up, it starts to distance itself from the EMA 8. This is a great place to start taking profits. Another situation where you would want to take profits is when the market has been making marginal new highs. Okay, not substantial new highs, marginal new highs. So when we get through that previous resistance level, that previous relative high, the market is just eking out a tiny little gain. So this would be an example. You get your dip, and then the market is eking out a tiny little gain, and it's starting to get away from that EMA 8. You're taking profits up in here. Another thing that you should be watching for is a gap up to a new relative high. Those are very frequently faded because they're going to attract selling pressure. There are going to be longs who see that as an opportunity to take profits, and that's where we can expect to see some selling pressure. So what are we doing? We're also taking profits if our market confidence isn't very high because we don't want to weather these dips. We are suspecting that one of these dips could be a really deep one. So your confidence in the market and the price action from point A to point B are going to guide you in terms of what you should be doing with the underlying stock. So let's take a look at the first slide that I had up and we'll review some of these points. So what kind of market cycle are we in? Bullish, bearish, trend reversal? It's going to dictate how we're positioning ourselves on the long side or the short side. How did we get here? What do the previous dips look like? What have the previous highs looked like? Are we making substantial new highs? If we are, that tells us that buyers are super aggressive and we're blowing through those previous highs. If we're making marginal new highs, it tells us that the market cycle is getting pretty mature and that there is some resistance. The warning signs, distancing ourselves from the EMA 8. That'd be an opportunity to take some profits. If you're worried about pending dips coming up, take some profits, take some chips off the table. Is there any pending news? So as you start getting these marginal new highs, then you want to be watching for FOMC statements. You want to be watching for jobs reports. Any big news that's pending could have a market impact. So those are times when you're going to be reducing your risk. So we've talked about the market. Now let's talk about the stock. You never, ever, ever compromise on the stock. We're always trading the market, but we're riding the fastest horse. We are picking stocks that are leading the charge higher. And these stocks are going to have nice, tight, orderly price action without exception. Okay, so I'm going to give you an example of a stock that I've seen a lot of people trading recently. I don't get it. I don't get it. Here's Tesla. Okay, in and out and in and out and up and down. And somebody is obviously saying that they can predict this price action in here. This is not something I would be trading. WDC. This is the kind of stock that I want to be trading because it's nice, tight, and orderly. It's the top pattern that I've mentioned. Tight, orderly progression. This I can predict. Well, why does it even exist? It exists because long-term buyers are engaged. They don't care what the market's doing. They want to own this stock. So a lot of these stocks are in indices. And so when you get a market sell-off, you've got sell programs selling the entire basket of stocks. Well, WDC is in that basket. So you've got selling pressure coming in because of the market selling pressure, but all of that supply is gobbled up by long-term asset managers because they don't care what the market's doing this week or last hour. They are focused on what this company is going to do over the course of the next 2 or 3 years. And they are buying, they are accumulating shares. We want to follow their breadcrumbs. If your chart doesn't look like this, you're in the wrong stock. You're trying to predict the flight of a bat. I want to predict the flight of a goose that's flying at 5,000 feet southbound in October because I can predict where that bird is going. And that's what trading is all about. It's being able to increase our probability of success and to ride that trail of breadcrumbs. So when I get a stock like WDC, and if I'm in a market where I'm seeing very brief, shallow dips that are quickly resolved with substantial new highs, that tells me that buyers for the market are engaged, and that tells me that I should not expect any big dips in WDC because whenever they show up, they're going to be snapped up. Those long-term asset managers are going to be gobbling up these shares. So every time the stock dips, I see this as a buying opportunity. As soon as the market finds support, I'm going to be buying this stock. And I'm going to be watching relative strength along with the market. So as long as the stock is preserving that relative strength, as long as the price action is nice, tight, and orderly, if I get a dip, I don't have to worry about it. Well, what happens if the market sells off big, and there is some kind of big news? Well, again, could you have anticipated it? Was there an FOMC statement? Was there a jobs report? Are you fairly nervous about the market? Do you have a lot of confidence in the market? Well, if you feel that the market is going higher, you have high level of confidence, and you have price action supporting that thesis, then any dip should be resolved. Bull markets die hard, and even if you get trapped eventually on a decent market drop that you didn't see coming, you know that buyers have been conditioned to buy dips for the market, and that at very minimum, you're going to get a lower high double top and a better exit point than if you just puked out your positions on that dip. So don't do that. If you're in these really, really strong stocks, are all of these buyers who drove this stock higher, are they all of a sudden going to go, hey, forget it. This stock is trash. I don't know what I was thinking. Sell it all. Get out of it. No, they're not going to do that. There are market impact costs. They're looking 2 to 3 years out. They are willing to ride out these little dips. And that's why we have this nice, steady price action. So if you're in a position in here and you're all excited about the profits and the money that you've made, and you see it starting to get extended from the EMA 8, yes, you can take profits. But if you're also recognizing that this is a longer term trend, you get a dip like this, not only are you holding your position here, you're waiting for this dip because once support has been confirmed, you're adding to positions. So I hope that this is helping to clarify when do we stop out on a dip and when do we expect a drop versus a dip. And if you're in the right stocks, you're going to get this type of nice orderly price action. And eventually, if let's say there's some type of news that comes out on the company, first of all, these longer term asset managers are not going to have this type of price action if the stock is real newsy and real vulnerable. I showed you Tesla. It's all over the place. EV car sales are this and tariffs that, and we've got new products that are on the come. We're going to have robo-taxi. We're going to have robots. Gonna have isn't right here, right now. So the stock is just chopping around. There's no real direction to it versus a stock where asset managers can say, hey, I really feel this stock is going to go higher long term. I like the upside rewards versus the downside risks. I don't see any big pending news items that's going to disrupt this. Well, that's when you get this type of price action. So if you get a little bit of a dip, be patient, be calm. It's going to be resolved. The stock is going to continue to go higher. If by whatever chance you do get a big drop in the stock, there's some kind of news. I think RBLX was one. It had a lawsuit that was filed against it because they weren't properly monitoring the age of kids who were coming in and using their product. Well, that was a news item on a very steady stock that hit right in here. Okay, so you really wouldn't have been in a bullish position here anyway because you had an earnings announcement and the stock still hadn't proven that it found support. But on a drop like this, okay, yes, you might have gotten blindsided by a dip and a news event that came out. Let's say it came out in here and not post earnings. Okay, now you've got to weather the storm, but you can see how the stock has been able to recover from that drop. How did we know that was going to happen? How did we know this lawsuit was not going to have a material long-term impact on it? These buyers are undeterred. They are in this for the long haul. They are going to view a drop like this in a lawsuit that might take many years to resolve, and there may not even be any kind of fines against the company. So those buyers are going to come back in and view this as an opportunity. And the stock continues to get right back into its top pattern. If you are picking stocks like this, you don't have to worry about the drops. Those buyers are there and they are going to buy that stock back up and you'll have a better exit point. You'll be able to, at very least, get out where you entered that trade earlier. So focus on the market first, get your market bearings, know what part of the bullish cycle you're in. How we got from point A to point B matters. Have the dips been brief and shallow? Yes. Then you should not expect any deep drops. Have the new highs been substantial? Yes. That tells us that buyers are engaged. So if you start seeing prolonged deep drops that barely make a new high, well, those are signs that the market is going to roll over, that it's transitioning. At very least, you've got buyers and sellers paired off. Those are times when you go to the sidelines. You wait for clear market direction. And even in a stock like WDC, maybe you're taking very small little starter positions, so you don't have much risk at all. And you're just looking to get in and out. You're kind of in hit and run mode. So watch for that top pattern in the stock. Do not compromise on that pattern. You've got thousands of stocks to choose from. There's always a stock that's in the top pattern. It's not real frequent. So maybe out of 3,000 stocks, maybe 20 or 30 of them will be in this pattern, maybe more. But you're not going to have a gigantic universe to pick from, but you're going to have the relative strength. You're going to have that nice tight orderly price action. That is something that you can lean into because you know that long-term market demand is there. You know that long-term demand for the stock is there, and that's what's fueling the move higher. So you get dips, stay calm, know that they're going to be bought up. Get the next move higher, then you can determine if you need to exit or perhaps even you want to add to the position because you know that that tailwind is super strong. Thanks for watching this video again. Please make sure to share this video with other traders. I'm just trying to educate as many people as I possibly can. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.